Hello, this is TIO Markets. I'm John Noble, and today we're going to be speaking about directional movement. What is directional movement? We'll get into that in a second, but first, let's get through the legal disclaimer. At this point, it's recommended that you pause the presentation and read through the disclaimer. I'm John Noble. I'm a professional investor and analyst for 21 years. I started my career in New York as a financial advisor with Morgan Stanley. I later on qualified to manage commodity futures funds and commodity trading and operate commodity pools by the U.S. National Futures Association. And then more recently in 2006, certified as a portfolio manager and investment advisor by the Cyprus Ministry of Finance. The ADX indicator or a directional movement, as all indicators and all of the tools that we use as traders, they're all there to help us solve problems. And the ADX is a tool that we use to help us solve the problem of identifying whether a market is trending or not trending. So the ADX can help determine at least if the market is likely to break out of a trading range, and the directional movement systems, they're going to fluctuate between 0 and 100. So let's get into this now. So the ADX indicator, first off, let's take a look of where we can find the ADX. The ADX is found on the MT4 platform. You go into Indicators, Insert Indicators. It is a trend indicator, and then here you're going to see there are a few of them. There is the average directional moving index, and then there's one that's a bit more refined, which is the one we're using today, which is the average directional movement index by Weidler. He was an analyst out there that made some modifications to the traditional ADX. So let's pull up the TIO Markets MT4. Let's see how we can find the ADX. So let's get into Indicators, Trend. This is the average directional movement index Weidler. Your settings will come up. They by default, the period measures 14, and your ADX will show up here. So what we're looking at in the ADX is the colored, the dark line here is your ADX. This is the actual index. And then you got a positive directional movement and a negative one. So the negative is in red, the positive is in green. We're going to get into show you how we can generate trading signals, or you can spot signals on better time your market. So, but before we get into that, let's look quickly at charts and what an uptrend and a downtrend is. So this here is an uptrend because you got higher tops, higher bottoms on prices. Here we have a downtrend. You can see that we've got lower tops, lower bottoms on prices. And then we have what's called trading ranges, where the market is not doing anything. It's kind of flat. So here you got a trading range. You got another range here. You got another range here. Here's a trading range. Here's a trading range. And you can see what happens after trading ranges. Well, you get breakouts. You get breakouts to the downside, or you get breakouts to the upside. And look at those moves. These are amazing moves. And the ADX indicator, what it does, it helps us to identify these type of breakouts and to capture the big fat piece of the move. So the directional movement, it's the difference between the extreme part of today and the extreme part of yesterday. So it could be what was the highest price today, the highest price yesterday, or the lowest price yesterday, and then there's a difference. And then that is going to be plotted where you get directional moving averages, which are positive. This will signify that prices are moving up. And then you have a directional moving directional movement, which is that it signifies that prices are moving lower. So here, what you can see, let's get into that. You got, this is positive directional movement in green, and it's that generally when prices are trending higher, you're going to see the positive directional movement above the negative directional movement, and when prices are moving lower, you will see the negative moving average, the directional movement indicator will be above the positive. So here you can see, looking at this price here, this chart, you can see that when the positive DM is above the negative DM, it tells you we're in an uptrend. And when you've got price, when you have here, which is the negative DM, and you can see price when the negative DM is above the positive, you can see that prices are going lower. So it's really is an awesome tool to help us identify and stay with these trends. So this is a very simple explanation here. It looks complicated, but it's really not. So directional movement, it's the difference between point E. So this would be a positive directional movement. So you have E, which is here, which is the high in a 2-day period, and point A, this will show you that A is lower than E. Then we got a positive directional movement. It will come in. It will all come in together a little bit clearer in a few more slides. And then you have the negative DMI here, where you can see the low today and 2 periods ago, where we have prices that today's price is lower than it was 2 periods today. So we have a negative. Simple enough. So the difference between the positive directional movement and negative is whether or not prices are closing higher, or they're above than higher than they were 2 periods ago, or lower. If today's price is higher, then we have a positive. If today's price is lower, then it will be a negative. So what the ADX indicator is, it's measuring that. So the directional movement, positive directional movement, it's normally when the directional movement is above the directional movement negative. So when the positive is above the negative, this indicates that prices are trending higher. Just take a second to absorb that. So here we have positive directional movement is above negative. Prices trending higher. Here we have negative directional movement is above the positive. Prices trending lower. So normally when positive is above the negative, this indicates that prices are trending higher. And the opposite, when the directional movement negative is above the positive, this would imply that markets are trending lower. So when doing this type of analysis, it's not giving you a signal. There's no signal here. It's just telling you that what side of the market should you be on? Should you be a buyer or a seller? Now, you need to drill down further, use some other analysis tools to actually time your entry or exits. But this here is just, it's a tool to help you understand what side of the market that you should be on. So, and the directional movement crossovers can help us with that. And so here we can see buy signals. So we get buy signals are generated when positive 14 directional movement is above the negative, and you get a cross. So this is the buy signal. Once we've identified the trend, now we're looking for buy signals. And let's drill down closer here, and here we can see that beautiful cross. So you got positive crossed above negative. There's that cross. And boom. There's that price. Can't say how powerful this is. Sell signals are generated opposite. Here we can see negative crossed above positive. And prices trending lower. So, conclusion: the ADX is used as a market timing points, let's say, for entering and exiting the market. So, sell signals are generated when the positive directional index moves above the minus directional movement, and buy signals are generated when the positive directional movement moves above the negative directional movement. So, let's go into the chart. Quick here, let's delete this indicator here. Let's look at a daily chart on euro dollar, where we are now, and we can see here that prices are trending higher. At the same time, what do we notice here? A cross. So you've got the positive crossing above the negative, and we've got that uptrend where we are right now. So that's a wrap up on the ADX indicator. Any questions on directional movement? Contact TIO Markets to find out more. Thank you and good luck trading.